Warm greetings to our viewers and welcome back to Bulletin Bites. Latest news on law, tax and business in India for Q1 2023. Time flies won't be an understatement to say so. We are already standing at April after a full-fledged union budget announcement in February. The G20 summit being held in various states, followed by the fourth round of India and European Union discussions on free trade agreement. And not to forget, the new foreign trade policy was announced on 31st of March. It has been a busy first quarter, and having said that, let's dive right into our crispy updates from Rödl Partner's Bulletin Bites, Q1. Starting with company law updates, our first update is by the Ministry of Corporate Affairs. For the purpose of upgrading its web portal, the Ministry has amended and modified various statutory forms for seeking additional disclosures in order to make the reporting process at MCA portal even more transparent. Details of the modified forms are available in the newsletter. In another interesting amendment for companies looking to buy back their shares is that now the company buying back its shares will be required to also submit an additional declaration certifying that the buyback of the securities has been made in compliance with the provisions of the company's law. Moving on to labour law updates. The first update is that the government of Haryana has removed restrictions on employment of women in factories during night shifts. Factories employing women in the night shifts are required to adhere to additional compliances like seeking written consent of such women, providing transportation facility, employing sufficient security guards during night shift, and separate canteen facilities. Moving on, the government of Karnataka has issued an amendment in the professional tax related provisions. As per this amendment, the salary threshold of employees eligible for payment of professional tax has been increased from 15,000 to 25,000. With this, any professional who earns a monthly salary of 25,000 or above shall be liable to pay a professional tax of 200 per month. Further, the amendment increases the amount of penalties levied on companies which fail to deduct professional tax from its employees or fail to pay the so deducted professional tax to the state government. Moving on to transfer pricing highlights. The Central Board of Direct Tax has issued a press release on the advance pricing agreement status for the financial year 2022-23. As per the release, CBDT has entered into 95 APAs in 2022-23, which is the highest number of APAs entered in a single year. This showcases the importance of APA program for the CBDT and the Indian government and the steps taken to boost the taxpayers' confidence. Further, the Hyderabad Tribunal held that outstanding receivable is an international transaction, and the tribunal directed to compute national interest on intercompany invoices that were outstanding beyond a reasonable credit period. Companies are advised to track their outstanding invoices from the group companies and should try to recover the amount within the agreed credit period. The Visakhapatnam Tribunal held that for transfer pricing purpose, a separate benchmarking analysis is required in regard to issue of interest rate paid on ECB loans. Merely relying on RBI circular on interest rate ceiling is not sufficient, as it is for a different purpose. Moving on to our updates from our customs and GST sector. An important update is that the Finance Bill 2023 was presented by the government and the same is passed by Parliament. The major amendment from GST perspective would be revamping of constitution and functioning of a GST appellate tribunal based on recommendations of GST Council. Further, amongst other amendments, extension of time limit is granted for revocation of cancellation of registration and issue of notice in certain cases. The long-awaited new foreign trade policy is announced by the government. The major thrust in the new policy is placed on paperless filing, online approvals, stability, and impetus to MSME by way of reducing charges. Apart from the said benefits, the amnesty scheme is also introduced for closure of old open licenses where export of obligations are not fulfilled. The benefit under Roadtep scheme is extended to certain textile and fabrics exported from India. Apart from aforesaid amendment, the state government of Maharashtra has also come up with an amnesty scheme to reduce the litigation for various taxes levied before introduction of GST, and the scheme will be valid from 1st of May 2023 to 31st of October 2023. The major benefit of the scheme will be for the dues up to INR 5 million. Let us now move on to the direct and international tax updates for this quarter. In a surprise move by the Indian government, while passing the Finance Act 2023 recently, the income tax rate for non-resident taxpayers earning income in the nature of royalty or fees for technical services from India has been amended and increased in the Indian domestic tax law from the existing 10% to 20%. With effect from 1st of April 2023. It won't be entirely incorrect to say that the move goes against the government objective of promoting ease of doing business in India. In an interesting decision, the Delhi Tax Tribunal has concluded that when only limited marketing activities are undertaken by a German subsidiary company in India, the subsidiary Indian company should not qualify as a dependent agent PE, that is permanent establishment of the German parent in India. Our BPO updates for this quarter focus on the importance of health check for the business. Conducting health checkups for business help identify and resolve the high-risk issues. The financial, tax and regulatory health checkups of the entity helps the management to align the business goals and strategies by effective risk management of its business. Our newsletter will provide an extensive and detailed information on this topic. Dear viewers, with this we would like to conclude our Bulletin Bites. As usual, for detailed information, refer to our newsletter and get in touch with us. If you found this bulletin informative, please press the like button, share it with your colleagues and friends. Stay tuned, stay safe, and stay updated.